Nike beat earnings even as China sales fell 12%. What does that mean for margins, cash, and your portfolio outlook? The headline is simple. Profits outpaced Wall Street expectations while revenue stayed soft. Management kept costs in check and held pricing, which lifted gross margins. At the same time, the company signaled a potential $986 million tariff refund. That cash would be a one-time boost, not a signal of stronger demand, but it could matter for how Nike funds its turnaround into fiscal 2026. Here's what stands out. Profitability improved despite lower units in select regions. That points to better product mix, more full-price sell-through, and tighter expense control. It suggests the margin story has legs even if top-line momentum takes time to rebuild. The tariff refund, if received as described, would increase liquidity without new debt. That gives management more flexibility for inventory buys ahead of key seasons, selective marketing around core franchises, and possibly shareholder returns, all without stressing the balance sheet. But the 12% decline in Greater China is a real swing factor. That market has powered growth and brand energy in past cycles. A slower consumer in premium discretionary categories makes forecasting trickier. Investors will want confirmation that wholesale reorders stabilize and that direct-to-consumer traffic improves before baking in a stronger recovery curve. Until visibility returns, multiple expansion may be capped, even with a clean earnings beat. The pacing of the turnaround also shifts. Instead of a quick snapback, the base case looks like gradual normalization through fiscal 2026. That raises the bar for execution, keeping inventory lean, protecting full-price sell-through, and focusing marketing dollars on franchises that move the needle. Watch gross margin progression, inventory days, regional trends in China versus North America, and any color on how the refund could be deployed. For practical positioning, separate the one-time cash from ongoing performance. Value the margin improvements, but don't over-attribute them to the refund. Stress test scenarios where China stabilizes later than hoped. If you own the stock, track management's guidance on margins and inventories quarter by quarter. If you are on the sidelines, look for evidence that demand in China is bottoming and that full-price sell-through holds as assortments refresh. Read the full article at finlitica.com. Quick reminder, this is general information, not financial advice. Your money, your decisions, so always do your own research.